What's up, everyone? My name is Mark. You are watching Money Market Truth. This is.
Hi guys, this is Mo. I'm from OTB Clubhouse. I'm an options trader and investor.
Yes, and as you guys know, I have my own YouTube channel called Trading with a Dummy, where I sit down occasionally with people and I interview them, the people who are in the financial literacy space. I do skits, I review trading groups, and honestly, I just try to make light of the entire tough part of the market and just have fun. But today we are here and I'm gonna let this conversation start off with Mo. So what's on your mind, man?
Well, so the name of the podcast is Money Market Truth. So we want to make sure we're talking about some of the stuff that most people stay away from. One of the things we want to talk today that I want to bring up is earnings FOMO. And basically, what I'm trying to tell you is a lot of times we have a plan and we're following the plan and we're getting our 20, 30, 40% compound, and we're happy. And all of a sudden you see something like Netflix happen. So just to give you guys an idea, if you bought a put of Netflix, let's say 250, 240, 230, anything around that range, in the morning, in the afternoon, or before market close, you could have made anywhere from 9,000% to 2,000%.
That's crazy.
And then that kind of stuff does mess up with your mind. And if you're a new trader, you should be watching this more carefully because it's happened to pretty much every single person that I've met, no matter how long they've been in this game, where you're following a plan and you're like, yo, I made like 250% for this week. I've consistently taken 40% profit. And then you see Netflix and someone YOLO'd their entire port and then they made 40, 50, 100, 200K. I saw someone who made 1.3 million off Netflix. So like that basically can mess up with your entire trading strategy. And what usually happens after that is you become a little bit more risky because in your head, you're like, yo, I've been following rules. And this guy right next to me on Twitter, who's always YOLOing his account, he just made 100K. So let me be like him and do that. So what comes next is you playing more earnings. So what happened with Snap today? If anyone played Snap, it's flat. So you lost money up or down, you lost money. Let's look at Netflix. Let's look at Tesla. All right. So basically with Tesla, if you had 1050 were around roughly $10 to $11, and then they open at $35. But if you got like 1100, like most people, you had about 2 minutes to get out. If you didn't take profits in those 2 minutes, the premium went from 550, which is what you would have paid for, to it opened up at 11 and then went to 450. So what I'm trying to get to is after you see something like Netflix, naturally what you do is you never go at the money or in the money on these earnings, you go out the money. So most people would have lost money on Tesla. Most people today would have lost money on Snap. So just know this is happening and it happens to every single trader. How you get away from is you think about one thing that I keep repeating: money does not always reward the right behavior. If you could just write that down somewhere and think about it every time you're going to do something stupid, just because you made money on something doesn't mean it was the right thing to do. And in the long run, that's a sure way to blow your account.
Yeah, you 100% on that.
I had a new trader, Mark, and he started in the mentorship, and he would almost call me every other day to make sure he's doing okay. And I'm like, yo, you killing it. Why are you always so paranoid? So his story was when Zoom in last September went like 150 points. He put in 3 grand. That was his first play ever. And the next day was 90 grand. From September to December, he blew up basically 80K. And in December, he had 10K left. Now, you told that to someone else without telling them the journey, 3K at the start, 10K at the end of 3 months, they'd be like, yo, you did a good job, 300%. That's not the normal return you can get. But what people don't understand, that journey drains you mentally and you can't stay in the game long run because all you're thinking about, what if I just quit after that or didn't take this play, didn't take that trade. So that's why like this is a topic that's very sensitive and a lot of people don't want to talk about it. But it is there and it happens to everyone, including myself.
I'm glad you touched on that because that also applies to investors as well, right? Speaking of Netflix, by the way, real quick, Did you think it was gonna drop
No,
like it did?
no,
Really?
no.
Oh, dude, I call that shit in a heartbeat. I was actually very proud of myself that, I mean, it blew way below where I expected it, but I didn't believe in it enough because I've been burned, like you said, with the earnings plays.
Yeah,
Earnings are dangerous because they go anyway, man.
yeah,
And even though I called that, I was like, yo, Netflix is going to go to 292 at 4 p.m. And it sure did. It sure did. It went all the way down to 250, and now it's on the low twos. I mean, Netflix is bad. And even as an investor now, knowing what I know about Netflix, right? I don't own shares. I did a video on it. I know some people are like, I can't believe you really bought it at $700. I didn't. It was just a joke.
yeah,
But just imagine the people who had FOMO when Netflix was running up last year and ran to $700. Somebody bought at $700. I know a lot of people who bought Netflix at 550 because certain gurus were telling you that's a great opportunity at that price. And now look where it's at. It's in the low 200s. And even at the low 200s, even after everything I know, I still get that itch. I'm like, dude, this could be a potential upside,
yeah,
right? This can skyrocket. You never know,
yeah,
but it can also continuously drop. It happened to Facebook, right? I bought Facebook at 300. That's after it dropped $80. And look where it's at now. It's on the low 200s.
yeah.
And I made a list of stocks that everyone was talking about in 2020 when the market crashed. This is when everyone became so-called investors. And I'm not trying to dismiss anybody's portfolio. I'm not trying to dismiss anybody's dedication, but majority of us, and honestly a lot of us who are probably watching this, who are following all these experts and gurus who are following us, a lot of us started in 2020 and we call ourselves investors. I do it too. I'm more heavy on the investing side than on the trading side. But
Yeah,
the reality is, I don't really know if I'm an investor or not.
yeah,
I don't think a lot of people know because it's only been 2 years. And I looked at my portfolio, and the stock that I held the longest, it was just Apple and
yeah,
VTI. And the
yeah,
longest has been 2 years.
yeah.
But had I bought any of these, look, I'm going to name you some of these stocks here. Had I bought any of these stocks in 2020 and just kept buying and buying as it was going up, I would be down right now. Facebook is back at the 2020 low.
Yeah.
Roku below $100. Again, that was early 2020. Square, RH, Restoration Hardware, Amazon is pretty close to its 2020 price. Shopify definitely is. AMD, AT&T dropped to the 2008 price. Visa, MasterCard, PayPal, Salesforce, and the list goes on. You want to talk about growth stocks? Dude,
They're
they're
not
all,
their value now.
dude, yeah, like it's crazy. So like when you talk about FOMO and chasing, like how many people sold out of their position for an L? How many people didn't take profit? Netflix alone, had you invested in Netflix starting 2019, dude, you just gave away all your gains plus more.
Yeah.
Like it's hard. It's hard to see your portfolio go down and continue to hold. Even Disney is now almost back at its 2020 price.
I think
So
Disney goes lower though.
I do too. I do. I think because of the whole drama currently with
Yeah.
the whole Florida, which by the way is I live in Florida.
Yeah.
Before anybody even speaks on that, you guys need to read the bill and actually understand what the whole fuss is about. But not only that, Disney has a lot of stuff going against itself, right? Right. The whole issue with Florida plus Netflix tank. Uh, so did all the subscriber services tank as well, right? Disney's predominantly a subscriber service for their Disney Plus channel. They kind of pivoted, right? I think it was last year they pivoted, or 2 years ago when COVID happened. They try to put most of their money into their streaming services. So because Netflix tanked, and that's the thing that I remember you taught me that they call them sympathy plays, right?
Yeah.
So when, for example, Facebook earnings came out and Facebook dropped, Snap dropped, Google dropped,
Yeah.
Trade Desk dropped, pretty much anything that dealt with advertising dropped.
Yeah.
And that's the same thing with Netflix. Roku dropped, Warner Brothers, which do you want to touch on that now?
Yeah, sure, man. I remember you were invested in that stock, right?
Yes. So I've been waiting for Warner Brothers. Well, I've been waiting for AT&T to finally split for about a year because I love HBO Max. I think it's a great competitor for Netflix, for Disney. I think it could possibly be the third most popular streaming service out there, right? But they were still with AT&T, which is a cell phone company. So they finally decided to split it up, which was great. But my concern I bought shares, by the way, in AT&T at $18. So I thought that was a great price to buy in at, and I'm up on it. That's the first time I scaled in. But also, Warner Brothers finally went public, and it had its own ticker symbol, its own entity. And it was, I think, $24 where I bought it at, $23, $24. But my only concern with Warner Brothers is that they invested so much money into CNN Plus. And I understand people like CNN. That's great. My background for like the knowledge that I have about CNN, like Fox News and stuff like that, they're not really a news outlet anymore. They're just an opinion entertainment show.
It is.
But
It is entertainment.
but I had why would you invest? Do they invested $300 million into CNN Plus? And is anybody asking for that? Was anybody asking for a subscription service to CNN Plus, which you already get for free online as well as on cable? Like nobody was asking for that shit, and they're so out of touch. They really believe they would have such a huge subscribers count to compete with Netflix and Hulu and Peacock and HBO and all those other ones. So day one, they slashed their price already. It was like half off already on day one. So I was concerned about that, and I had made a post on our Instagram, and I said, I'm buying Warner Brothers. It's at $24. I think it's a great valuation at that price. I believe it can go to $45. Long-term investor. This is my investor hat. It can go to $45. Even the analysts were saying go to $45. But my only concern was CNN Plus. I was like, if that backfires, that stock's going to drop. And what happened today? They pulled the plug on CNN less than a month after going live. Yeah. They realized it was a bad investment and they plugged it. And I think it's down like 8% already. So I got out of it. I sold all my shares. I'm going to wait until it goes into the teens. I think after maybe the first earnings, they're going to eat that cost. It's going to show that they didn't make money, obviously, because of that. That's going to be a huge hit. And then afterwards, I think it might be a good time to start investing into it. But it also depends, again, on the sentiment, right? Because like you were saying, you don't think the market's going to be going up anytime soon, right?
No, I don't. The thing that's really interesting here is Netflix just comes and talks about how they've lost 200K subscribers, and then this happens today where CNN Plus is getting shut down. I would look at when their earning is, and if you probably will find something in their earning calls about subscribers and stuff like that, because no way you spend 300 million and shut it off after a month. Does that make sense?
Absolutely. Something happened.
Something happened, which they will cover in earning call, and it will be more like, hey, this is probably where we lost our money, but we fixed it, we shut it down. It will be something like that where they're like, yo, it's been taken care of, because everyone gave like, I don't know if you know this, if you've been to Netflix's earning call, they're very real. I've been on one of them where I heard the CEO said that we're probably going to lose a lot of subscriber because the next quarter is summer. And usually you see people hype up stuff on earning call and not be so negative. But the whole time, this is when Netflix was 700. I had calls on that earning play. I remember I bought those calls for $700 and they opened at $6 the next day. Yeah. So I've been there, and you have to go through that. There's very few people that actually admit that they've done all these dumb things. Most people don't. And I could promise you, you don't learn from other people's experience when it comes to this kind of stuff. You actually have to firsthand experience it. The reason why we talk about it is so you don't really punish yourself or dwell on it. You've made the mistake. You've done it. Just move on now. It happens. That's why we talk about it. I don't expect people to be like, you probably would want to try it because you think you know how to play earnings. There's a lot of gurus on Twitter that claim that, you know, they don't lose in earnings because they know how to play it better. So yeah, like Netflix, we'll talk about it. There was a 440 call block on it that I put it in the earnings channel. Then there was a 250 put block on it, and it did 250, right? It could have gone either way. I didn't think it was going to go 400, but you never know what happened with earnings.
Yeah, because it's really, that is gambling. You're like, dude, you're playing roulette, really. Black or white or red. That's it. Choose. It can go 50-50 because the earnings can be good, but it could say something that rubs Wall Street the wrong way or market makers the wrong way, and they will just tank it. They would just take shares out of it.
Mark, I've worked, I'm pretty sure, I don't know if you have, I worked for a public company, and I can tell you there's things you can do to make the numbers the way they should look like.
Yeah.
And there's like, you can sandbag, you can move sales, you can move cancellations, you could do so much stuff to make the books look a certain way. And so they have a lot of that in their control. I'll give you an example. Let's say your bonus is based, all the VPs, everyone's bonus is based on a certain number, and they've already hit that. And so if they go anything over that, they're not going to get any more money. So could they move all those extra stuff to the next quarter? If they can, then they'll do that. That might not meet the expectation of Wall Street, but since they've all hit their bonuses, doesn't really matter. So I've seen this stuff firsthand.
Yeah. And I know it's funny because like I think we are two good examples of two people that do things differently, right? I like investing, you like trading. Right?
Yeah.
If we look at our portfolios, I think I have more stocks than you do, I think.
Dude, my portfolio is like I wouldn't be, I don't look at it, but I'd probably be down 40 to 50%. It's a very, very smart, small portfolio. I sold most of my shit in November, and I told everyone that I will not buy Leap again or stock. And I think that's when you started as well. And I've been very transparent on Instagram too. People think I was crazy. Fed is doing tightening. Nothing looks rosy anymore. And Congress pulled out their stocks. They were not forced to. That's where we need to get better at. They make the rules. So they pulled out most of their stuff out. And we were like, my biggest position was SE. Ticker
I remember. I remember SE. Yeah.
I got it at 250. It went to 450. I sold 80% there. Then it went back to 250. I'm like, I love this stock, and I was emotionally attached, but I'm like, fuck it. Let's just sell it at 250. Now it's at $80. Had I held it, I'd be down a lot. Like, it would have been like a lot of money. Right now, I am probably down anywhere from 40 to 60%, and I'm not touching it. I'm not doing anything about it. I do think, Mark, that this is going to get fixed, and at some point things will bounce back. But I am not like I've done investing in real estate, and that's where I'm comfortable. When it comes to stock, I cannot just hold something that's down 50% and then someone's telling me, well, hold it for another 10. I can't do that, because from a house, at least you're getting rent, which is paying your mortgage. So in a way, it's paying itself. But when it comes to stock, that's like, you look at it, you're not liquid anymore because you put the money in there and you're just going down on it. So that's how I look at it, and that's why I'm not the best person for asking for any investment advice.
Yeah, but you're also good at trading, so that's the difference, right? So you're way better at trading than I am. I have no problem. I mean, dude, I got, like I said, Facebook, and I got Square, and those are down significantly. But it is rough. It's rough to see, and I think one of the biggest mistakes that I did on this journey is, like you said, chasing in the FOMO. I kept trying to buy the bottom. That's what happened with Square. It dropped to 190. I was like, that's the bottom. Dropped to 175. I'm like, that's the bottom. It dropped to 150. I'm like, that has to be the bottom. It dropped to 135. This has to be the bottom. It can't go lower. And I even posted and said, dude, it could go to $80. And I was kidding. It was the levels. It was the demand zone levels. But I was kidding. But it actually hit $80. And that's where it bounced off. But it's like, Jesus, man, like, things, you cannot time the bottom. And I know some people, they see a price and they're like, oh man, this is really low. This is amazing. Netflix right now is at the low 200s. I could get in right now. What I've learned is it's better to just sit on the sidelines, stack cash when it comes to investing. And you may not time the bottom. Okay. So yeah, it might be $200 today, and tomorrow it might go up to 220. And you could be like, damn, I should have bought it at $200, but then it could drop right back down to 200 or 180. I think it's best just to sit on the sidelines. And so what if you're a little late buying in on your entry? So what, you didn't get the perfect entry at $200. You may have gotten it at 260, but it's reverse. It's in a bullish trend. It's moving up. Things are looking great, and you don't have to worry about that massive pullback. But I also learned, and this is a pure example looking at all the stocks that I mentioned, dude, Netflix is a pure example that you can long-term invest, and you need to probably set up a profit-taking point or maybe some trailing stop, so you don't wake up in one day and then all your profits gone. Because, dude, I feel bad for everybody who invested into Netflix from 2019 up, who literally just woke up one morning and saw 3 years worth of gain just gone.
Yeah.
obliterated. That has to suck. That has to suck. And it takes a certain person to be able to sit there, eat that, and just be okay with my portfolio is just down 70%. Like you said, you're real about it. You're like, I can't do that. Me, I feel like I can. I have for the most part. But with certain things I did cut loose. Like I said at Warner Brothers, I don't want to be in any more situations where my stock is all the way down. I bought Roblox at 100. I bought Roblox at 48. It's at 30 something.
Yeah.
I'll probably buy more, believe in the company, but
I think it gets bought out, man. I think Roblox by itself is nothing. I think it will get bought out. Like I wouldn't worry about stuff like Roblox. I would worry about stuff like even Tesla right now. Like I know it's holding, and that I want to talk about shit that no one's talking about. I think Tesla is at a place where a lot of people feel safe and comfortable. Same with Apple and Microsoft. And I'm saying that every single bear market, if you study, it
mhm.
starts with oil prices going up and then real estate and then interest rates slowly going up and then that leaking into housing market, then leaking into stock market. And then the last one to turn are the Apple, Microsofts of the world. And when that happens, I set this in November that when that happens, when you see Apple, I don't know, 120, 110, 100, and I know people will think it's crazy, but that's when you're going to know it's over. It's going to be over when everyone's scared shitless, and that's just how it is. And that's when you want to be buying. But that's a very subjective thing I'm saying. So I personally would want to start investing in indexes, Vanguard stuff, because I
Mhm.
don't want to worry about shit. That's where I'm gonna start putting my kids' money and start dollar cost averaging. Like, and then the lump sum would be in three different ways. Like, so sorry, not three different ways, three different terms, payments. So, like, let's say if I have 100K, I do 30K one month, 30K another, just so you don't think this is the bottom. Put in 100K, realize, okay, shit, we went another 50% down. That's what you don't want to do. And then the term that you said you're okay being late, in technicals, we say you're paying the price for confirmation. That's what
Mhm.
it's not being late. You're paying more because you got the confirmation that we broke the downtrend, right?
Yeah.
And like, I want to talk about one thing quick. All these businesses can change overnight. I loved UPS and I loved FedEx, and I used to think nothing will ever happen to them. And news came today. I don't know if you know that
I did not.
Amazon is now letting people use Amazon Prime services. So Nike now can subscribe to Amazon Prime and take advantage of the network they have, the infrastructure they have, the logistic they have. They don't have to go with UPS and FedEx.
Damn, that's gonna be a blow.
Yes, it's kind of like what Apple is saying you can use iPhones to do as a payment terminal. So
Mhm.
that takes a lot of business away from Square and PayPal. Now, I feel like population's growing, business is growing. Eventually, it will be fine, but for 5, 10 years, it might not even go back to break even because this shit happened.
Yeah. I also think it's time that people stop listening to all the experts and even us, man. Like,
Yeah, yeah,
stop listening to everybody online talk about the same tickers and the same stocks. Like, shout out, we just talked about this. Shout out to Q. He works on
yeah,
Wall Street. He actually knows shit, dude. We and him have spoken. The things that he has told me to look into, like companies to look into, dude, they're all legitimate companies. HEES. Who's ever spoken about that? Nobody that I know of. What's another one? I got it here. The IVs, that's something I found, which are similar to like the XLKs, SPLG. I found that when I spoke about that. ROLL. What's another one? HRI, ZIM. Like, there's all these ticker symbols, stocks that I've never even heard of, DVN. All these things do great, and I think we need to stop always looking at what's popular or what's popping on Twitter right now, what's cool, because it's always the same stuff. It's the top 10 and the S&P 500. And if you want to invest into the S&P 500, do just get a SPY at this point.
yeah. Dude, thing with Q is like we talked about this before this podcast, and at some point we're gonna bring him on because people need to see the kind of information he looks for when he's investing in stocks.
Mm-hmm.
He's not like I've never heard him say, "Yo, buy Apple, it's
Nope.
safe." The stuff that he's recommending is safe, and no one's ever heard about it, so they're not crowded trades. Um, and they do well. And there's a very important thing that you mentioned. You should stop listening to us or anyone when it comes to investing, because people will just say, how long have you been holding for? You say a month. Well, I told you for long term and told it for 10 years. You're not going to go back to that person after 10 years, be like, yo, it's too late. That's why I like trading, because we're playing weeklies a month. Like you can't make shit up when you're trading. You can't say my success rate is this bullshit, all that, because you're going to get caught. Investing, though, I see a lot of people say it'll be fine, just dollar cost average. You just don't have no faith in the process and you're losing money. You're not going to dollar cost average. So that's it. When it comes to investing, you need to listen to yourself and only put in money and only like look at stuff that you know about. Right? Because if I
Yes.
give you a random ticker, you're not going to invest just because I told you, or you won't hold when it's down.
Yes, that's actually one of my rules, and I'm glad you said that. Don't invest and don't trade anything you don't know. Like that's a rule that I made. I don't care how good it is. If I don't know enough about the company, I'm not going to invest into it
Yeah.
or trade it. Because again, that's also all the tickers I just named. Those are good investment because if you look at them, some of those things have been up like 160% in a year. But that doesn't necessarily mean that they're good to trade because it may not have the liquidity that is required to trade, right? So that's another thing to look into. It's two separate things. Again, guys, like I'm more on the investing side. Mo is more on the trading side. They both have pros and cons. It's you need to figure out where you fit in and what works best for you on your journey. But it's rough, and I think there's just so much noise out there that it can mess people up. Like I was telling you earlier before we went live. So I futures trade, and today I had the perfect setup, dude. I had a perfect setup. And I didn't execute because I was in a room and someone had said something, and because I felt that this person was a better futures trader than me, I didn't execute on it. But damn it, dude, I was right. It hit my target, and then Nasdaq collapsed like hot shit, just all the way down, dude. It was like 800 ticks.
If
Like
you
I couldn't
shorted
believe.
anything today, pick a ticker, 10x today. It was that easy. You just had to hold.
Yeah, everything was tanking. So it's pretty interesting. Do you have anything else you want to touch on when it comes to like the whole FOMO stuff?
The FOMO, man, like I would say, like, and we keep talking about it, but it's important. That's why we talk. Don't compare. That's one. Second is write down the list of rules that you have. It could be simple rules. Like I had a pretty shitty week last week. It was probably one of the worst weeks I've had in I'd say last 6 months. And what I did was I wrote down rules, and I only had two rules, and the two rules was only do like basically buy when it's on demand and sell it's on supply. And if you missed the trade, don't worry about it. So today I got into SPX and it went down $1, and I felt like I took it in the middle of the range, so I got out. Right, I lost $100 per contract on that play, and then I got out. And then it went to the supply, I shorted it again, and then I made 160%, and then I got out again. Right, and then after that it went down another 800%, but I missed the move because I couldn't catch it in the range. And I had two people that missed it too, and one of them said, I'm so pissed that I missed it, I could have made so much money. And I said, money doesn't always reward the right behavior, and don't say that to yourself, because tomorrow you're going to chase and you're going to get clapped. And so that line, like, I don't know where I need to put it, but that's what's kept me sane. And the difference between last week and this week is my mindset. The market hasn't gone better. I don't have anything better in terms of indicator or call out coach or anything. It's just I changed the way I was doing things. I was a little bit more risk on the last few months, but as the market's getting tougher, I'm going to focus more on compounding small gains rather than looking at those 200, 300%ers. I'm not going to do that moving forward unless something just falls in my lap. That's not what I'm shooting for.
Yeah, it's important to have a trading plan, and you should stick to it 100%. And the only way I think you can really refine your trading plan is sometimes to see what works and what doesn't work. Do you agree?
Yeah, absolutely, man.
Yeah, and it's funny because as you just mentioned that about how you got out at 160%, you said, and then it went
Yeah,
to like 800 something. It's like,
800% more. So it's total 1,000%.
oh Jesus, yeah, that's
Yeah.
You gotta eat that. I mean that happened to me. Was it yesterday? Wednesday. Same thing in futures. I traded. My trading plan is I'm going to get out at 25 points, which is 100 ticks minimum. Is
Yeah,
my plan on Nasdaq because it's a new strategy I learned. This is my rule, no matter what. The problem is sometimes when you're surrounded with other people who are doing the same thing that you're doing, but they can exceed you, and then you start getting angry or disappointed in your own win. Dude, I
yeah,
hit 110 ticks. I made money. Everyone else in the group that I hang out with made 400,
yeah,
500 ticks. And I was like, damn, I should have just held it a little bit longer. But no, man, be happy. You stuck to your plan. That was my plan. It's 100 ticks minimum, point blank, period. No matter what, be happy with it. It's in my trading plan for right now. I need to stop comparing myself to other people. And I think I'm actually doing a whole video on it on trading with a dummy on my channel. I just need to edit it. But I think the biggest problem with a lot of people who are new to the game, and I'm sure it's you deal with the same thing in your group, is you have people who come in who don't have that much experience
yeah,
and they get easily influenced by other people who may be better, or they're constantly comparing themselves to other people and chasing that that bigger win because they see other people do it. But like you also said, a lot of people don't really mention their losses either. They just
yeah.
mention their wins. So it can be psychologically a psychological challenge for you when it comes to sometimes being part of a group if your mindset is not strong enough to stick to your trading plan and stick to your guns when it comes to execution. You need to have an entry plan, you need to have an exit plan, no matter what. Who cares what other people say? Stick to your plan, because I can tell you from firsthand experience, if I lose on a trade because I stuck to my plan, I don't feel as bad as if I lose a trade because I just randomly followed someone mentioning something on Twitter or
Yeah.
whatnot.
Yeah, no, man, I completely agree with you. And that's like the stuff that you go through. That's the stuff most people go through too. And that's why I'm always vocal about talking about your losses, because you're like, if you're the admin, you on a Discord or anyone, it starts from you.
I think we're out of time. We actually went over time. So,
Yeah,
yeah. So, I mean, other than that, man, Mo, do you have anything else to say?
I'm good, man. That's all from me.
Yeah, I think we're good. Once again, everybody, if you have any suggestions on things you want us to talk about or cover, definitely DM us, Mo at OTB Clubhouse, me at Trading with a Dummy. We also have an actual Instagram page which you can follow, which is Money Market Truths. You can listen to us on all the podcast platforms: Stitcher, Google Podcasts, Apple, Spotify. We're always going to drop the voice version, or the audio version first. And a couple of days later, the visual will pop up on YouTube, mostly uncut. So please come subscribe, support, share this video, like it, and continue to tune in every single week to Money Market Truths. See you guys later.
See you guys.